And now South African petrochemicals group Sasol reported a 6% decrease in core earnings. That's headline earnings per share. This coming down to a 36.03 rand. Pulled down by interruptions to production, a stronger rand and employee-based payment expenses. Joining me now in the studio to talk about the company's results as a whole is the Chief Executive Officer, Bongani Nqwababa, who is just going to walk us through the numbers. Bongani, many thanks for sparing time to actually walk us through the numbers. Let's start with the earnings. We're looking at down 22%. I want to look at maybe the top line here. Sales for base chemicals also down 1%. Performance chemicals close to 1% up. A mixed bag, if you ask me. What did you make of it?
It's a mixed bag. Our chemicals businesses, because they are more exposed to the international growth projection, they are doing quite well. Our energy business, the demand is lower because of our sluggish economy in South Africa. But however, the product differentials or the refining margins are high in energy. So it's a mixed picture, as you say, very positive on the oil side. And because of the 6% strength in the rand for the year under review, it brought the results down.
I'm very fascinated by your diversification drive here. And let's start with closer to the border, Mozambique. This actually in your communique highlights Mozambique as a key area here. And just walk us through some of the diversifications here that we're talking about before we go to the U.S., because that's the big one.
Okay. Mozambique is key in our path to transition to a low-carbon economy. So, for example, we used to produce all our chemicals using coal in Sasolburg. Now we use gas from Mozambique. So it's pretty critical to our operations. And we are actually exploring more, not only the area where we are in Pande and Temane, but also in southern Mozambique to make sure that we can expand on our resource base, to make sure that we increase value not only in Mozambique, but also in South Africa.
Eurasia, another base that's actually sticking out here. Operations up close to 3% this year on year. I'm very moved by how you're not only doing this for maybe Mozambique, but you're actually sticking out when it comes to our Eurasian markets too. Which one here actually sticks out the most?
In Mozambique, it's largely the feedstock, which is gas. But in Eurasia, that's where we've got our core base of specialty chemicals, which are very key in our growth and are also key in our makeup of the new plant in the USA. So that's where the growth is. And then we've got a plant for ethylene oxide, which we're building also in China.
Biggest news is that a progress report, of course, for the Lake Charles project. Everyone is actually gearing up for this one. You're mentioning that it's 88% done. Yes. As a whole, what does this mean for the company's midterm prospects?
It's quite significant, and we see financial year 19 as quite a defining year for Sasol. Just to illustrate this, in terms of a EBITDA, or which is a proxy for cash, the contribution to cash by financial year 21 and going on to financial year 22 will be $1.3 billion US, which is quite significant. And it will result in our earnings being balanced between South Africa and offshore on a 50-50 basis.
And one thing that sticks out about this US project is the fact that close to 80% of your debt now is US dollar denominated, and this can be traced back to the Lake Charles project. How much pressure are you under here when it comes to FX risk?
Actually, we're not under pressure because, as I've said, that most of our earnings thereafter will then come from the US. So we're quite comfortable about it. Our gearing is 43% this year. It will go to a maximum of 44% also in financial year 19. But thereafter, there'll be a significant drop off in the gearing because the capex comes down quite significantly. For example, the capital expenditure in this financial year was 53 billion rand. It comes down to 38 billion rand next year, and then the earnings start going up.
Right. One thing that really sticks out here is the low oil price response plan. And this is hedging at its best, if you ask me. But I'm very fascinated by the fact that you cut the plug on the plan come June 2018. does that mean that you're very positive the oil price is going to hit, well, over $85 a barrel in the near term?
Not necessarily, because that was based on the response to a low oil price. But now we are moving on to a phase of continuous improvement, that we should have these initiatives every after 3 to 4 years, but we should make sure that we move on to a continuous improvement mindset, be it asset reviews, digitalization, or operational excellence, to make sure that this becomes a permanent feature of our business. That's why our break-even cost as a company is now down to $35 per barrel, whereas a few years ago it was closer to 70.
Your net cash position down 42%. And again, this traces back to the plans for Lake Charles in the States. Big investment, of course. But how much, wouldn't one argue that you're actually backing so much on the project in the U.S., yet there's so much uncertainty with the Trump White House?
As far as our industry is concerned, actually, he happens to be good for us. For your own information, our taxes have come down significantly. So we only pay tax in 7 years' time. And also the margins happen to be quite good at the time we're commissioning the plant. So actually the fundamentals are quite positive for us.
I think you're the first person that I've talked to who's having a particularly different view. But we cannot talk about your line of work without talking about safety. Now, I do understand the RCR has also gone down, well, if you exclude the illnesses. What could be the rule of thumb here and best practice? Because already this year we've had arguably more fatalities in mines as opposed to the whole of last year. What could be a best practice here that many of us can actually learn?
It actually boils down to the fundamentals. And in our case, what we have seen benefiting us since we had all those fatalities is the leadership response and the culture you have in the organization. If you really, really care about your people and ask them every day, how are you, and you know what frame of mind they are in. So if they are really troubled, you won't send them underground. You rather deal with those issues. So we are not only looking at it technically, we are also looking at it from a leadership and behavioral perspective.
Bongani, we cannot go on about the results without mentioning the elephant in the room, which is the unplanned electricity outages that, of course, also had repercussions on your production and ultimately the bottom line. Are there any contingencies here? Because this might go on maybe till the midterm.
So we are working very closely with Eskom, and actually their technical people are very supportive on the ground to make sure that we build redundancy in making sure that we've got dual feed into our plant in Secunda, and also working with them to make sure that we build another substation for redundancy. So we've got plans in place to make sure that we mitigate any issues which might be there.
We're looking at close to 16 billion rand when it comes to depreciation and a few, well, one-off payments here and there to employees. And your BEE program, it has been a mixed bag, some sitting on the fence saying maybe a lot of money is being pumped into this particular program, maybe it shouldn't be. How do you answer these critics?
As you'll be aware that Nzalo unfortunately did not pay out because it was largely pegged to the share price, and then the oil price did not perform. But now with the Kanyisa, it's based on the fundamental cash flows of the business. We have seen it being successful in our oil business and in our mining business, and we'll work together to make sure that it is a success. Bongani,
very briefly before I let you go, fracking has become synonymous with the business, at least the oil business and crude and Brent. Do you get the sense that in the long run, oil is going to be determined by who can actually invest so much or fund a huge asset-wise investment towards fracking as opposed to the traditional means that we've become accustomed to?
Fracking has changed the dynamics, but you can't do away with traditional, conventional extraction of oil, because the other issue which is underestimated is that the decline rates for fracking are rather high. So if people rely on fracking on its own, you might see the oil price spiking again in 3 to 4 years' time. So you need a balance of both.